Hey guys, welcome to the live stream. Welcome to the basement. $4,000 gold. We're going to talk about that in 1 second. A big brokerage house is calling for just that, $4,000 gold. Where do you think that'll put the silver price? We've got another analyst we're going to talk about here in a few days that's talking about $184 silver. Unbelievable developments, but we got other major stories to cover. First, I want to say thank you for joining me here in the basement. It's a big deal when you come down here. I want you to feel like you're in a little home away from home, a little refuge from all the craziness that's out there in the world. This is not possible without you. Please subscribe to the channel, give the video a thumbs up, and leave a comment in the comment section. If you don't agree with me, that's a-okay. Trust me, read through the comments. There's a diverse opinion about where we're heading in precious metals. I have my opinion, you have yours, and we can all learn from each other. But let's talk about the biggest story of the week. President Donald Trump comes out with a game changer. Earlier this week, actually yesterday, there's President Trump has now opened the door for 401k retirement plans to invest in private equity, crypto, and real estate. Okay, so millions of Americans now with trillions of dollars in 401k plans are going to be open to investing in a much more risky side of the investment world. Couple thoughts on this, and I want to get your opinion and see what you think about this as well. Hold on 1 second here. We're having some technical issues. Hopefully you guys can see me and hear me this morning. Hello, Rios. Hello, Mark Pierce. Hello, Gail. Hold on here. Trying to get this worked out. Okay, a couple big things about this 401k money being able to go into crypto, real estate, and private equity. Number one, it shows that people want to get away from the US dollar. The real value of the dollar is going down, which we know if we decide to price the value of our silver and gold to use the dollar as the unit of measure will only mean that the price in dollars of gold and silver will continue to go up. But the big question is, come on, Donald Trump, when are you going to let people like fully invest their 401ks into physical gold and silver that they can hold on themselves? I know a lot of stackers out there would like the idea of being able to self-custody their silver and gold, but still hold it under that 401k umbrella. I wouldn't rule anything out. We'll see where that goes. But we're going to keep a close eye on that. Certainly, we are in a period of change. Do you feel it? I mean, it is becoming blatantly obvious to me that we are in a period of change financially in the world like no other in history. And maybe that's why Fidelity is calling for $4,000 gold. Let's go look at that. And I want you to think about, what does that mean? Where I'll ask you the question, do we hit an all-time high in the silver price when we hit $4,000 gold? I'll go out on a limb and say, yes, absolutely. I think that's what's going to happen. Once we get that 4K level in gold, silver will get to a new nominal all-time high somewhere above $50 per ounce. But let's go see what the people at Fidelity are saying. It's very interesting, and we got a lot more to talk about, including some focus on silver as well. But we saw this yesterday. Here we go. Okay. All right. This came from Fidelity. I apologize, guys. You know how technology can be. We're having some tech issues, but you should be looking at a Metals and Miners article. Let me go back and check. Yes, you are. Okay. And it says right there, Fidelity gold price could hit $4,000 by year end. Now, there's a little confusion here. I never want to mislead anybody. I'm not sure if this is the big Fidelity that me and most people our age have accounts with here in the United States, or a different one, or the Canadian arm of it. You can decide for yourself, but it says right here, gold prices are heading towards 4K per ounce by the end of this year as the Federal Reserve, by the end of the year, begins to cut rates and the US dollar continues its decline, according to a Canadian investment firm, Fidelity. In an interview with Bloomberg on Tuesday, fund manager Ian Sampson said the firm is still bullish on the precious metal, with some cross-asset portfolios recently increasing holdings after prices eased from the all-time high of $3,500 back in April. The rationale for that was that we saw a clear path to a more dovish Federal Reserve, Sampson said, adding that some funds had as much as doubled their 5% allocation over the past year. We're going to go out in a minute here and look at the FedWatch tool and see what we can expect for the next Fed meeting and our old friend Jerome Powell in just 40 days. But let's also revisit a little further down in this article Goldman Sachs, because the bullish outlook for gold mirrors that of Goldman Sachs, which has made the case in recent quarters for an eventual rally to as much as $4,000 per ounce. Okay, now they're talking about cutting rates. Let's look at this big story that came out this week. The Bank of England is now cutting interest rates. And guys, why is that important? We're not going to read much more in this, but that is important because, believe it or not, those Brits, our friends in Great Britain, home of the LBMA, the London Bullion Market Association, they still have major sway when it comes to the world monetary policy. The Brits are quite wealthy. That's the reality. And the other important thing, the other reason why we want to pay attention to that is that these world central banks do not operate in a vacuum. So as more and more world central banks are cutting rates, the next to come will be our old friend Jerome Powell in the United States Federal Reserve. Let's go out and take a look, get an update here. We're live on Friday morning, the 8th of August, 8 of 2020. Soon it'll be 8/8/2028, and then we'll really be great. But let's take a look at CNBC and get an update on the gold and silver price. I think we were down a little bit earlier today. Here we go. Let me make sure I'm sharing the screen, which I'm not. You have to watch me struggle. Here we go. Okay, and gold. We want the gold price. Come on, CNBC. Oh, okay, we're up. Wow. I didn't realize that. So in the futures market, gold's up 36 an ounce. Silver up almost 22 cents per ounce. I apologize, I wasn't sharing the right screen with you guys there. Now next, I am going to share this screen. We're going to go out and look at what the Fed's got going. So in 40 days, you can see it right over here, lower right side, we will get the next Federal Reserve decision on interest rates, monetary policy. But what we want to look at is a little further down here. There we go. Okay, so 89%. There's the current rate in the middle. Middle top tells us 4.25 to 4.5. And right now, the market is pricing in an 89%. Make that smaller for your viewing pleasure. There we go. That should work. Sorry, I didn't have that ready. 89% chance that we are going to see a rate cut here. Just so you guys who don't know how to read this, this is the current rate, right? 4.25 to 4.5. We have an 89% chance that rate, hold on here. It's a live stream, bear with me. There we go. That rates are going to get cut by a quarter of a point. 10% chance over here, as you can see, that rates are going to remain exactly the same. So we're going to keep a close eye on that. That will be, again, very, very good for the price of gold and silver. And we had some interesting news this week from UBS, the big Swiss banker. Again, this time talking about gold, reiterating a $3,500 price target in the near term for gold. What's interesting are the reasons why they said that. Now, again, this is UBS. This is the big Swiss bank, right? Remember secret Swiss bank accounts? The Swiss are known for their money management skills. They are bullish on gold, but most importantly, most interesting are the reasons why. And they listed these: a weaker dollar, a weaker U.S. economy, and a weaker job market, and higher odds of a Federal Reserve rate cut. It's coming, guys. Be ready. But what UBS said about silver is even more interesting. We talked about this in a previous live stream, but you guys have overwhelmed me to kind of dive into this one a little bit more, because UBS also said, okay, silver price outlook, UBS updates its price target. I got this all highlighted for you. Their UBS strategists raised their forecast for the silver price to $42 per ounce across all tenors through June of 2026, so 10 months from now, citing stronger investment demand and a recovery in industrial activity. With these new forecasts, we reiterate our preference to stay long silver and view price pullbacks as buying opportunity. That was from Dominic Schneider and Wayne Gordon. They wrote in a note, silver exchange traded fund inflows remain solid, bringing total known holdings to around 786 million ounces. Regional trends and retail demand show strength in India and a recovery in Europe. However, conversely, which I think means oppositely, the U.S. market has faced headwinds with retail demand estimated to have fallen by at least 30% year to date, the strategist noted. Okay, that is important, guys, because just if the United States, if United States investment demand for silver goes back to normal, all we want is for it to go back to normal. Hold on here. Boy, sorry, guys. My computer is acting crazy. Here we go. Hold on. Now we're back up. I apologize. We just want it to go back to normal, and we will have a massive influx of new money into the silver markets. Sorry, we're going off the rails a little bit this morning. StreamYard and my internet is acting up. Also, silver. There's a supportive backdrop with dollar diversification, but also silver is in its 5th consecutive year of annual deficit, estimated at 118 million ounces for 2025. This brings the cumulative shortfall since 2021 to around almost 800 million ounces, reinforcing the positive price outlook. Okay, why is that important? That's important for us to remember because, hold on one second. Okay, I'm back. I apologize for the technical issues. This is live streaming. And we're hitting the important points, though, aren't we, Dusters? By the way, don't forget, if you like watching me struggle on live streams and you like hanging out in the basement, knowing that I'm a real human, please feel free to subscribe to the channel. That would be greatly appreciated. I think we got some slowdown. Hopefully you can hear me. What's important to realize about the silver deficit in the silver situation, though, is quite simply this, okay? There's only so much silver above ground, period. And as we move forward, okay, year by year by year, as we're taking more silver out of the above ground stockpiles, eventually it runs out. Eventually, there's no more grandma silverware to be melted down. There's no more silver that's available. And that's when the only thing that will fix that situation will be a higher price. Next up, let's talk about the fact that the silver and gold paper markets, I'd like to try to share my screen, but I think we are having some pretty nasty issues right now with technology. I'm going to try anyhow. This came from Arcadia Economics, our good friend Chris Marcus, and I think we're up almost. Yep, there we are. Okay, we've got still in the paper markets a very, there's Arcadia Economics, Substack, Gold and Silver, Bank, COMEX. Short positions remain near all-time highs. Let's go down here and take a look. As you might imagine, given the current price levels, the short position held by the banks in both gold and silver markets remain near the extreme end. The current level for both metals is slightly off the all-time highs, and I would imagine that would remain the case again this Friday, which will be today, when we get the latest COT report. So the short position in the paper markets for both gold and silver are near all-time highs. This is gold, and as you can see, he circled that in red, where you can see the near record all-time highs on the gold short position. And then here is silver. from the COT report, again, near, looks like, I guess if we go back a number of years, I think this went back to, is that June? No, I looked here earlier, back to 2007. But again, we are at or near record all-time highs in the short position in the silver market as well. Let's do a quick check of the, here we are. I think we're back now. Sorry, guys, we have been having some streaming issues this morning, but let's go take a look at the silver price over in China. This comes from our friend, the Oriental Ghost, and he is showing us in no uncertain terms. Oh, come on, there we go. This is the Shanghai Gold Exchange, okay, the Chinese market, the physical market for silver and gold in China. And when we look at silver, which is AG on the chart, on the SGE, the Shanghai Gold Exchange, which is, again, pretty much their physical market, right? We are at a price of $40 per ounce. What if we go back to, let's go back to CNBC here for a second. See if we can get this to pull up. Yeah, silver in the United States. In the futures market, $38.54, probably a bit less in the spot market. So guys, the physical price of silver in China, which we all know is where the current price setting mechanism is moving, continues to be significantly higher than what we have in the United States. It's absolutely crazy. On top of that, there are so many fundamental factors driving the silver price forward. I'm going to talk about one of them next. But before I do that, I do want to say thank you to First Mint for sponsoring the gold and silver content. They're a silver mint located in Las Vegas, Nevada, owned by First Majestic Silver. First Majestic Silver mines the silver in Mexico, sends it to Las Vegas, where it's minted into world-class silver bullion products. You can check them out at firstmint.com. They have all original pieces, great customer service, free shipping on orders over $199, and there's a discount code you can use, VIPRB. But another factor that you don't hear a lot of people talking about with silver is the actual production of silver coming out of the mines has been going down, down, down. Okay, we're seeing that in Mexico. We're seeing that on a worldwide basis. At the same time, when demand for silver continues to go up, we are getting set up for an absolute perfect storm. And the silver market is so small. Wait till you see this. This was an excellent piece that I saw that I wanted to share with you that just demonstrates how unbelievably undervalued. Oh, hold on here. Oh, where did it go? Hold on one second, guys. I'm going to let you look at the Shanghai Gold Exchange while I go back and pull up. Here it is. No, darn it. Where did that go? I think this is it. Yep, here it is. Comparing, this is incredible. An incredible fact about our friend silver. We're waiting. We're going to wait. We're patient. We're silver and gold investors. We've been patient for years. It's almost here, guys. I won't sing for you or anything like that. Come on, pull up. There it is from Honza Cerne. One Amazon, okay, the company Amazon, one Amazon is worth more than the entire global silver market, okay? It's a, look at this, okay? Silver, he says 2.1 trillion. Humanity has mined all the silver on Earth over thousands of years, and yet its total value doesn't even exceed that of a single U.S. company that ships boxes most people throw away within 6 months. And still, some insist silver is a bubble. Here we go. All the silver ever mined is worth 2.1 trillion, and one Amazon is worth 2.3 trillion. And this was from a few days ago. So with knowing how the stock market's been going, it's probably even more exaggerated at this point. Let's look at another crazy fact that we have when we compare the gold price. This shows how gold has performed since 1999 comes from our friend Make Gold Great Again. He says, almost nobody on the planet Earth realizes that stocks are down 60% versus gold since 1999. And the way he's presenting this is simply this: the Dow to gold ratio. So how many ounces of gold does it take to buy 1 unit of the Dow was at its top in 1999, right? Almost 45 ounces of gold to get 1 unit of the Dow. Today, we are at 17.77, and that appears to be going down. He's got a target of 0.5. But basically, when you compare the value of the Dow versus the value of gold, we've had a major significant decrease since 1999. It's going to be interesting. It feels like we are continuing down what is a very supportive path for the precious metals, for the value of the precious metals. We know it's worked for thousands of years. It's likely to continue working. Thanks for joining me. Thanks for being part of the basement. Don't forget to subscribe. Leave a comment in the comment section. You don't have to be nice. That's how we learn, is from each other. But I want you to have a great day. Take care of yourself, guys, okay? And I will see you soon.